So today we're going to talk about what an arm loan is and if it makes sense for you. Now you definitely want to make sure you stay to the end of this video to make sure it's the right product for you because it's not for everyone. And also if this helps, make sure you like and share. So rates have been going up this year. I'm sure you've already heard about it. So as a result, when we start getting higher rates, we start coming up with different loan strategies to make sure we get you the lowest rate possible. One of these strategies is using an ARM, which is an adjustable rate mortgage. So you always hear back a 30-year fixed. That's kind of the bread and butter, the vanilla loan of mortgages. But an ARM is a loan that can adjust. So it's going to have a certain set period at the beginning, maybe 5 years or 7 years or 10 years, where the rate is fixed. But after that, it can adjust every 6 months or every year, depending on what's going on in the market. Now, the positive of this is that fixed rate at the beginning is often a lot lower than just a normal 30-year fixed rate. But the downside is when the loan does start adjusting, the rate can go up. So it can cause some risk for you. So does it make sense for you to have an ARM? If the fixed rate of the ARM, the beginning rate, is a lot lower than the total fixed rate, like on a 30-year fix, it can make a huge difference, maybe saving you tens of thousands of dollars over that fixed period of the ARM. The question is, though, are you going to have this loan longer than that fixed period where it starts adjusting? So let's say you do a 7-year ARM where it's fixed for 7 years and you plan on moving in 6 years, then an ARM might be a great product for you. Also, there's a really good chance that we're at the peak of the market on rates, which is when ARMs were invented back in the 80s when the rates were at 18, 19%. So it's quite possible when that rate starts adjusting, then it will actually go down, or as rates go down, we have a good refinance opportunity for you to get you into a fixed rate. Kind of the bigger question is, why not to do an ARM? You say, hey, the rate's lower, that's great. First, are you risk adverse? If you're risk adverse, just stop watching the video. This is not for you. The last thing I want you doing is waking up in the middle of the night sweating because you're thinking about your rate adjusting in a few years. And if you plan on being in this house for a longer period, let's say maybe the fixed period of the ARM 7 years, but you plan on living there for 10 years, or maybe you're going to keep it as an investment property, an ARM might not be the best product for you because the problem is it can start adjusting while you still have that loan. And lastly, if you think there's a chance that you either won't or can't refinance, let's say you're going to be retiring in a few years, and yeah, rates will be down, but you wouldn't qualify for a new mortgage anymore. I don't think the ARM is the right product in that case because we want to make sure you have the best deal for you, not just the best deal overall or the lowest rate. Because keep in mind, sometimes the lowest rate is not always the best rate. So once again, I hope this helped. I know ARMs aren't fun to talk about, but really my goal is to save you as much money as possible. And if this is a video that helped out, definitely like, comment, and subscribe to my channel.